This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Our global stocks rally losing traction as the market euphoria fades following the Fed's jumbo rate cut. The pivot to easing signalling a potential turnaround point, though, for Hong Kong's battered stocks. Apollo Global set to offer a multi-billion-dollar investment in Intel as rival chipmaker Qualcomm makes approaches about a takeover. And exchanges of fire between Israel and Hezbollah intensify as a Lebanese militant group declares a new phase in the conflict. Well, before we get to our top stories, we do have breaking news just crossing the blue line when it comes to the latest gauge of how economic momentum is faring here in Australia. We do have the Judo Bank Australia PMI numbers just crossing the Bloomberg, the composite number. These are the preliminary readings for the month of September, coming in falling actually under that level that demarcates growth from contraction. From 51.7, we've seen that composite reading falling now below 50 to 49.8. The manufacturing reading also shrinking further into contractionary territory at 46.7 from 48.5, and the services component there just keeping its head above water, falling quite steeply though from over 52 to now 50.6. And this, of course, as we see the RBA set to extend the rate pause but not ready to embark on this cycle of monetary policy easing that we've seen many of its global central bank peers already get started on. Housing is really sort of propping up prices at the moment when it comes to being the biggest driver in inflation after the services component. The RBA status as that policy outlier is looking ever starker, Shery, when it comes to what we've seen from the Fed, of course, going big last week.
Yeah, We'll be watching inflation numbers out of Australia in order to gauge that out-of-pace cycle that we're seeing in Australia, right? As we are also watching, of course, inflation numbers out of the U.S. We had the Fed out of the way, that 50 basis point rate cut already happening, but it will be the Fed's preferred gauge of inflation that we get later in the week that we'll be watching very closely for sort of indications of where we go from here, right? We also get Tokyo inflation numbers out of Japan, an indicator of nationwide prices at a time when we're also contending with the elections of the president of the ruling Liberal Democratic Party, which, of course, eventually will become the prime minister of Japan this week.
We also have a lot to focus on when it comes to the geopolitical scenery, right, Shery, as we continue to watch these developing escalations of conflict in the Middle East, and that's going to keep sort of traders on their toes. But a couple of major events happening this week. We do have President Biden hosting the Prime Ministers of Australia, India and Japan for that Quad Leaders Summit. That's taking place in his home state of Delaware. We also have, of course, a lot going on when it comes to the United Nations. All eyes on New York City this week. We have not only the United Nations General Assembly, but also hundreds of events taking place across the city, including Climate Week, New York City as well. So a lot of talk about sort of climate financing and how policy goes from here. But when it comes to that Quad Summit, quite interesting, particularly as we had, that hot mic moment, right, from President Biden at the Indo-Pacific Summit, really talking about how China is testing the United States and its allies across the region during this latest summit. So quite interesting. And of course, we also see the Biden administration really finalising their latest measures on China as well, tightening the screws on in terms of some of these restrictions on trade and security as well. So these actions, even as we count down to the end of Biden's White House tenure, could come through over the next days, weeks or months before the election, Shery.
Yeah, those geopolitical challenges will not really help China in terms of really that pressure that we're seeing in their economies. We already got, of course, those numbers last week. We'll be watching industrial profits out of China. We are seeing the offshore yuan holding steady at that 7 level. But it's really the setup across Asia that we're watching very closely. It could be some thin trading in today's session. Japan is away on holidays. We had seen a little bit of upside for Japanese equities coming into this week, given that we had some weakness in the Japanese yen. And that's what we're watching very closely, right? I mean, we got that downside pressure after the BOJ held steady, but Governor Ueda signaled that he's in no rush to hike rates, given that he's watching financial and FX markets very closely. On the other side of that trade, we had some strength for the U.S. dollar. Take a look at how we're setting up in U.S. futures right now. We had seen a little bit of upside in U.S. equities on Friday, just to fade throughout the session and end the session lower on Friday. Still, we're talking about 2 weeks of gains for U.S. equity markets. Right now, a little bit muted in the early Asia trading session, but it's really what to do with how investors are watching where the Fed goes from here, because it's been really interesting that despite that we got that 50 basis point outsized Fed rate cut, we didn't necessarily get that market panic, which was a very big fear among investors. We continue to see that steepening of the yield curve as well, and we'll be watching, of course, oil prices trending at that $75 a barrel level. Haidi.
Lots to talk about, Shery, and the question is sort of what comes next, right? Our next guest says one key market risk is the premise of Goldilocks outcomes from central banks, often based on rosy assumptions. Vishnu Varathan is a head of economics and strategy at Mizuho Bank and joins us now from Hong Kong. And Vish, I've known you for a long time, and Goldilocks scenarios is not really the thing that you tend to go for, right? Markets essentially, in a way, got what they wanted, or what large parts of the market expected from the Fed. What's the playbook now?
Haidi, good morning. It's a wonderful way to characterize how miserable I am, not going for Goldilocks scenarios. So absolutely, that's what this is about. So the thing about this is, as pointed out earlier by Shery, the thing is, the 50 basis point cut did not trigger recession fears, unlike what we saw after the July non-farm payroll numbers. So what markets would probably be looking for here is really a very fine balance in the data, where the disinflation continues unfettered, whereas jobs doesn't deteriorate too sharply, and that leads to the Fed keeping pace with the cuts that is suggested in the dot plot, and actually slightly more, because the forward markets are pricing in significantly more cuts than the Fed has suggested so far. So to some degree, both Goldilocks as well as the relief from rate cuts are already quite priced in. And so when you're priced to perfection, it's quite a high bar to continue with the rallies unfettered unless there's a new source of stimulus.
So is central bank error your biggest sort of policy risk at this point? Because there's certainly lots of other things that we could be worried about too, from domestic US politics as we get closer to November to, broader Middle East conflict that we're watching right now.
I think you hit the nail on the head. Somehow that ship has sailed. The policy mistake era, where that was the biggest risk on our radar, was probably in the first half of the year. So right now, I think we are past that, where corrections can be made very effectively and efficaciously. Instead, we probably have to see whether they manage to get the timing just right or not, because even if we get more upsized cuts now to compensate for lack of earlier, the trouble is it might be too late, whereas, as you rightly pointed out, new flashes of risks can come about either from geopolitics or US elections. And I think that's where markets will also probably need to grapple with correlations changing, in particular the way the positive correlation between the dollar and yields. That might decouple if you get a big risk-off scenario. And also, I think markets are quite closely watching how the dollar-yen behaves from here. I mean, they managed to keep it within range, but if the Fed were to start cutting faster than they've earlier suggested, it is quite difficult for the BOJ to reclaim control over the yen, because a lot of it is driven by the Fed.
Yeah, I mean, it was really interesting how careful the BOJ was in really framing the risks around financial and currency markets, right? What really caught my eye, though, was the BOJ talking about how currencies will actually have more of an impact on prices than before. Does that sort of give you an indication of the pace of tightening that we could see from the Bank of Japan?
Absolutely. And I think central banks are not quite wrong in saying that. I think they fished out something a little bit deeper from the economic textbooks to focus on monetary conditions, which include both interest rates and foreign exchange rates. And I think, in the current circumstances of exceptional volatility in currency rates, that has become a huge risk. And in the case of the BOJ, as you rightly pointed out, they've really flagged this risk as top of mind, mainly because a very sharp appreciation of the yen brings about both adverse income shocks as well as wealth shocks via the Nikkei effects. And so that's something that the BOJ is careful not to steer into inadvertently. but one way or the other, and this currency risks apply not only just to the BOJ, but more widely to most other global price takers. The trouble is most other central banks are in a place where they're trying to avoid unforced errors now, and not so much actively being able to mitigate, because a lot of these risks are going to emanate from both the Fed as well as US elections, and the ability of central banks to mitigate that is somewhat compromised.
Yeah, another central bank we're watching this week is the Reserve Bank of Australia. What are the risks that you're watching in that economy that could potentially have global impacts? Because I know that that bank is really struggling with surging housing prices, and that's not the only central bank across Asia that's been facing those issues. We have financial risks also emanating from Korea as well. Are these some of those universal themes that we should be watching out for the rest of 2024?
I mean, it certainly looks like it. I mean, as you rightly pointed out, and I like the word struggle, it's really about the internal conflict that these central banks have. And the trouble comes back to another textbook concept of, one policy tool only being able to chase one policy objective. So whilst you're trying to tackle the balance between growth and inflation, the trouble is asset markets, the type 2 inflation, so to speak, and in this case, housing, that might require intervention via macroprudential measures, so that it takes the pressure of monetary policy, and monetary policy can focus a bit on where exactly the economy is, and forward-looking wage price risks more, in a more precise manner, rather than also being burdened by asset prices, because asset price swings can come about very quickly, and typically the interest rate tool is not going to be very effective in controlling the aftermath of it.
Vishnu, always great to chat with you. Of course, Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. We do have some breaking news when it comes to a deal that has been sort of going back and forth for some time. We're hearing now from REA Group that they've sweetened the offer deal for the value, I should say, of the offer for Rightmove to 770 pence per share, saying that the Rightmove shareholders will own about 20% of the combined entity, saying that they haven't had a substantive level of engagement yet from Rightmove. So we continue to watch what the next steps are, because REA saying on their part they remain ready to engage immediately with the Rightmove board. We did hear really over the weekend that Rightmove rejected an improved takeover offer from REA Group. According to people familiar with the matter, that offer had valued Rightmove at about £5.9 billion. This, of course, would be a strategic move if it went through to boost the global scale of Australia's REA. That sweetened deal of 750 pence a share was undervaluing the company, according to Rightmove, according to the people that we spoke to, but that's now been boosted to 770 pence per share. We have seen Rightmove shares rising more than 20%, of course, REA being part of Rupert Murdoch's broader empire. They had made that first approach earlier this month. So we'll continue to watch for those developments, Shery.
And Haidi, coming up on the Asia Trade today, Japan Foresight joins us to discuss how this week's ruling party leadership election may impact the government's relationship with the BOJ. Robeco tells us why they're positive on the Asian markets in a rate-cutting cycle. And the Lowy Institute talks to us about this year's Asia Power Index. We have much more ahead. This is Bloomberg.
We do have some breaking news when it comes to some regulatory action being taken against Australian supermarkets. Coles and Woolworths, of course, two of the major supermarket groups in the country, being sued by the ACCC. This is the Australian competition regulator on pricing claims. We're hearing that the ACCC has commenced separate proceedings in the federal court against Woolworths, as well as Coles Supermarkets Group, which is a subsidiary of Coles Group, over the alleged misleading prices dropped and down claims, pricing claims when it comes to the discounting claims on hundreds of common supermarket products that are said to be misleading consumers. So we'll continue to watch, particularly when it comes to the market reaction. But of course, we know that when it comes to the broader cost of living crisis, the inflation fight here in Australia, some of these big supermarket chains have been coming under increasing criticism and pressure for these alleged sort of mispricing and perhaps misleading pricing claims that are now being looked at by the ACCC, Shery.
Yeah, we'll be watching those stocks at the open in less than an hour, but we continue to follow geopolitics. President Biden has been caught on a hot mic at a diplomatic summit, saying China is, quote, testing the U.S. and its allies in the Indo-Pacific. Those comments came even as the Quad Group's leaders publicly sidestepped the idea that they're a counterweight to Chinese influence. For more, our China correspondent Mimi Lo joins us now. Mimi, when will these leaders learn that there's always a mic there and to be careful? But what exactly did President Biden say?
Yeah, well, he was overheard on this audio feed that was mistakenly publicized. And this was a meeting of the Quad leaders. The Quad, by the way, is a loose alliance of 4 countries, Japan, Australia, India, and the U.S. They were meeting in Biden's hometown of Delaware. And at the public opening remarks, the Quad members appeared to be quite keen to sidestep any mention of China. It was not explicitly mentioned. And Prime Minister Modi had explicitly said that they were not against anybody. But then the moment reporters were escorted out, then Biden was overheard turning his attention to China. Have a listen.
We believe Xi Jinping is looking to focus on domestic economic challenges and minimize the turbulence in China diplomatic relationships. And he's also looking to buy himself some diplomatic space, in my view, to aggressively pursue China's interest. China continues to behave aggressively, testing us all across the region.
So Biden then went on to talk about China's aggression in the South China Sea, the East China Sea, the Taiwan Strait, and South Asia as well, where we know China has a border dispute with India. And he says that these are issues that are relevant across all 4 countries. And we know that, yes, the Quad is collaborating in a number of issues, including climate change, renewable energy, cancer prevention, using robotics to assist, to advance agriculture, for instance. But countering China is a big part of the agenda. According to their joint statement, the 4 countries, their border guards and coast guards are looking to set up a new observer group next year to enhance or advance maritime security. They're starting a training initiative to assist these 4 nations to enforce the law and to prevent any unlawful behavior, aggressive behavior in the waters of the South China Sea. And the statement also expressed serious concern about this militarization of disputed areas in the South China Sea. And we know that China's foreign ministry has previously said that the Quad has been trying to antagonize and, start confrontations. So it looks like, this discrepancy between the public relations message and what Biden is actually saying to foreign leaders suggests that, both sides are very cognizant that any sort of deterrence on one side could be misinterpreted as aggression by the other side.
And even as, of course, the clock ticks down to the end of the Biden tenure in the White House, still lots of efforts being made in terms of tightening the screws on China.
Yeah, so the U.S. Commerce Department has been meeting with industry experts to look at how to address the security situation or problem that is created by a new crop of smart cars that have these devices that connect the vehicles to the internet or cloud services that then make these vehicles a target for hackers. So the proposals will aim to ban the testing and the use of Chinese and Russian software, as well as some hardware that are used in automated driving and vehicle communication systems. Now, the intention is to prevent hackers from being able to intercept these communication systems using software that are developed by Chinese companies, and to prevent that data collected on U.S. drivers to be sent back to China as well. Now, the aim is to get these rules enacted by January of next year after a 30-day comment period.
Bloomberg's China correspondent Min Lo there with the latest. Well, in the meantime, tensions between Israel and Hezbollah have intensified after the Lebanon-based group launched around 115 rockets, missiles and drones toward vast areas of Israel's north. For more, let's bring Bloomberg's Michael Heath. So we've seen a continuing build-up when it comes to concerns that this is going to spread to a wider conflict. What are we watching?
I mean, it looks like we're on the cusp there now, doesn't it? I mean, we ever since that sort of audacious move by Israel, well, presumably Israel, with the blowing up of the pages and the walkie-talkies, we've had Hezbollah obviously responding now with what you mentioned with the missile attacks, but Israel's also sent in jets to try to preempt some of those strikes, targeting silos, targeting other Hezbollah leaders. So it's almost like we've, as the Defence Minister of Israel said, we've sort of entered a new phase. I mean, the war in Gaza and the hostages seem to have sort of fallen back into the background as everyone worries that we're now going to see a new conflict basically between Israel and Lebanon. Now, Lebanon obviously is not central to this, but because Hezbollah is so powerful in Lebanon and governmentally you can't do anything there without its say-so, Lebanon and the Lebanese get dragged into this conflict as well. So it's looking very, very tense on the border. The question is, just how hard Hezbollah will go. It's much better armed than Hamas was. It's much more professional. It's much wealthier. So Israel's going to be up against a more formidable foe here, I think.
And as you say, Gaza is not resolved yet. So it's interesting that we're seeing this widening of its ambitions, if I can put it that way. But I do wonder, how do Western allies feel about this? I mean, they were already losing patience.
It's almost like, I mean, Gaza, the Western view of it almost seems to have become secondary now as we enter this new stage. Yeah, whether ambition is the right word, I'm not sure, but it seems to be that Israel is looking to use this moment to deal with everything, sort of thing. And I mean, Hezbollah sits right on the border. They want to get their people back into these northern communities. They don't want to have them, sort of as internal refugees there because they can't be safe in their own homes. So they seem to be determined to either push Hezbollah back, or if Hezbollah won't move back, to make them go back. Now, we've seen this before in 2006 when there was a huge war between Hezbollah and Israel, and in the end, Hezbollah claimed victory. So what Israel can do in terms of politically, operationally, with its intelligence services, etc., war often doesn't prove to be quite as good a solution as you'd think, given how powerful Israel's military is there. So, I mean, there's still room for diplomatic moving. I think they're both feeling each other out here, but it's looking worse and worse in terms for a widening of the conflict.
The fear right now is just of escalation and a broader war, right? How do Israelis feel at the moment about what could happen from the West Bank if we could see something similar from Palestinian militants there?
Yeah, there's some good reporting on Bloomberg on that today, just looking at how Hamas is sort of, and Iran as well, is trying to sort of build up a bit more power in the West Bank, which is obviously the other enclave. But this is not held by Hamas; it's held by the Palestinian Authority. But the Palestinian Authority sort of fallen away in the eyes of its of people who live, of the Palestinian population, in terms of it's fairly rotten, and so there's efforts by Iran and Hamas to try and build their operations up there, and Israel's trying to counter that too. It doesn't want another October 7.
Bloomberg's Michael Heath there with the latest. We do have more ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to a bit of underperformance from Australian bonds ahead of the RBA decision this week. We are seeing underperformance compared to the move in US Treasuries, of course. That two-day meeting getting started to begin. We've seen that fall of about, I should say, the yield on the a 3-year up about 3 basis points, about the same when it comes to the 10-year. RBA expected to extend that rate pause. This is Bloomberg.
This is the Asia Trade. Here are the latest from the corporate front. Bloomberg has learned that Apollo Global Management has offered to make a multi-billion-dollar investment in Intel. Sources say the alternative asset manager has indicated it's willing to make an equity-like investment of as much as $5 billion in the chip maker. We're told nothing has been finalized and the size of the potential investment could change. Now, that development comes with California-based Qualcomm. said to be floating a friendly takeover of Intel in what could be one of the biggest ever M&A deals. Sources say Qualcomm has been speaking with U.S. regulators and believes an all-American combination could allay any antitrust concerns. We're told also Qualcomm hasn't ruled out buying or selling parts of Intel in a combination.
Shery, let's take a look at what we're seeing when it comes to broader commodities at the moment. Of course, these China concerns continue to play out. We get that boost from the Fed's supersized move last week, but we are starting to see that fade somewhat. Oil, of course, Middle East geopolitics really front and centre as we see the increased pressure there. We're seeing oil holding pretty steady. New York crude holding at just above that $71 level, under $75 a barrel when it comes to trading in Brent at the moment. That Fed boost is really starting to fade somewhat, but of course some of these concerns over what's going on with Israel's killing the senior Hezbollah commander, this so-called new phase of this conflict, is weighing. A lot of choppy trading though when it comes to oil. WTI saw its biggest weekly gain since about February. Also watching iron ore at the moment, we're seeing downside trading in Singapore by about 1% there. We have seen really these continued concerns when it comes to China's steel industry, still seeing record losses, export peaks there, and not much of a signal when it comes to an imminent recovery there. Well, executives from some of the top multinational firms, including GM, Adidas, HSBC and Rio Tinto, gathering in Shanghai for the 36th International Business Leaders Advisory Council meetings. Our Chief North Asia correspondent, Stephen Engel, has been looking at what's been discussed at this conference. So, Steve, interesting times, as always, for these corporations operating in China. What was kind of the broad mood and the tone of these conversations?
Well, I think it is obviously a little bit subdued given the condition of the Chinese economy right now. But this IBLAC was set up many years ago as sort of an advisory and also kind of an opportunity for Western businesses to come to Shanghai and advise and to meet with the Shanghai mayor and to come up with opportunities for business. Obviously, the world is a little bit more bifurcated right now, still looking for opportunities. One of the main participants yesterday who gave a keynote speech was the Rio Tinto chairman, Dominic Barton. He wears many hats. He was also the former Canadian ambassador to China. He's also a part of Leapfrog Investments. He's the chairman investing in the global south. He tells me for the mining world as a whole, for the global economy as it has its energy transition to cleaner energy, it needs more copper for one, and that means Rio Tinto probably is looking at more organic growth, build more mines rather than M&A. We began this exclusive conversation, though, on the sidelines of IBLAC, talking about the Chinese economy and the trouble in the property sector and how that is reflected, obviously, in more or less demand, I should say, for iron ore.
It's tough. I mean, I think looking under underlying consumer demand, that's not as strong as it has been. But that said, I think there's still fundamentals that are there in terms of core investments that need to be done. This energy transition that we're in the middle of, the urbanization that's going on, the innovation that's happening on so many different dimensions. So I'm what I'd call a frightened optimist.
What kind of stimulus would you like to see in the last few months of the year to kind of put a floor on the property sentiment that could then, of course, lead to steel demand, iron ore? There's a lot of surplus in the iron ore.
So you're talking about China now?
China, yeah.
I think with China, fundamentally there's a property restructuring that's going on. It's been going on for a while, and it'll probably be going on for a little while longer. I don't think this is really about iron ore or anything like that. It's about a shift in the economy. The key thing is unlocking the consumer. Right. And the challenge with that is you've got, with property prices going down and people having a lot of their wealth in property, they feel less wealthy, and we're seeing the effect of that. I think the property restructuring probably has to continue. I don't think that can change. There's a process they're going through. I think the issue is how do we give people, the consumer, the confidence about where things are moving. Obviously, stimulus programs and so forth are music to people's ears, but I think what we have to understand is there's a deeper restructuring for growth that's going on. It's tough right now, but I'm actually more longer term optimistic. Again, when you look at the investment that's going into the greening of this economy. It's massive, and it takes steel to be able to build wind turbines and grids and so forth, aluminum, copper. You know, from our point of view, that's going to be the urbanization is at 65%. That's where the U.S. was in the late 50s, early 60s. You've got this consumer side that needs to be unlocked. That's the conundrum. But I'm not worried about this the economy, particularly in the medium term.
Where would that lead then to your assessment of possible inorganic growth and your capital allocation going forward, given the situation here in China? And which areas would you like to see inorganic growth? Because you've been relying mostly on greenfield projects and
organic's going to remain fundamentally important. You know, we've got this massive supply-demand gap. You're not going to inorganic your way to solving that. You know, we're going to need to discover, mine, and process more copper in the next 30 years than we have.
You have Oyu Tolgoi.
Yeah.
Not online fully.
Yeah, but I'm saying the world needs to do it. What I'm saying is going out there. Of course, we're going to be thoughtful in looking at where there are opportunities, but I'm saying as an industry, we're not going to inorganic our way out of the challenge because of this massive supply-demand gap. It's huge, and it's in at least 5 different commodity areas, and so that's going to need more mining. We're going to need to develop more projects, so we're just not going to be able to get it done. So, of course, we're always going to be open and interested in seeing what opportunities are there, but the fact of the matter is we need to build more to be able to meet this gap that just continues to grow.
How about in the lithium space? My understanding from those who I've talked to saying there needs to be consolidation. How much consolidation and how much of a player would you be?
I don't want to get into any specifics of it, but what I would just say is I think that there, you know, to be able to, on the just EVs and the shift to EVs, which I, by the way, don't think is going to be about policy. They're actually proving to be fantastic cars.
So regardless of the tariff regimes that are being put in place, these are going to go someplace?
I think they're going to go. There's going to be the consumer demand for them. I mean, look at this Xiaomi SU7. You see its performance versus the Porsche Taycan. You know, these are phenomenal cars. People are going to buy them. You need batteries, so you need battery materials to be able to do that. So I feel very optimistic about, you know, the growth there, and I think the challenge is it's taking a long time to be able to get permitting, to be able to build these projects. And
well, you mentioned copper, and you're having some regulatory issues in Arizona as well. Does dare I say, a Trump administration help that? It would be a different administration, different approach?
I don't know. I mean, our view is that, you know, we have to make sure that we're working with the First Nations that are on that property. We have a number of them that are very positive about it.
The
but
indigenous people.
Indigenous, we have to do that. But the fact that could represent 25% of U.S. copper demand, that we could supply that's there, but we have to go through the process for it. And I think, you know, already during the Obama period, there was a support for it, and I think the issue is we just have to follow the due process and work it through that way. As long and painful as that may be, that's what we have to do to do it properly.
You wear many hats. Obviously, chairman of Rio Tinto. You're also chairman of Leapfrog Investments, investing in, I guess, the global south and other areas. But you're also the former Canadian ambassador to China. I want to get your assessment of what's going to be the dampening effect to this bifurcation that we are seeing. Increased trade wars, global trade, geopolitics has really split the world, and nations and blocs are being forced to choose sides. What's that do to inflation? What's that do to global growth and global trade?
Yeah, I'm worried about fragmentation. As you said, I don't think we can have decoupling, because I think the impact on inflation and on the consumer is just untenable. But that's the kind of the direction, right? The sort of this fragmentation, and it has a cost. And so I do worry about that. I mean, we need resilience. We all learned we needed supply chain resilience from COVID. But this notion of fundamentally breaking down supply chains, we just have to recognize there's big costs to that. And the cost will be borne by the consumer.
Obviously, Canada and China having difficulties right now over EV tariffs of Chinese EVs into Canada, and there's potentially retaliatory probes also going on here in China on Canadian canola oil. But again, Mr. Barton is no longer the ambassador, Canada's ambassador to China, didn't necessarily want to talk specifics, leaves that to the government, obviously officials, as they navigate that difficulties. But again, the main takeaway from this interview was that Rio Tinto, at a time when there is a wealth, if you will, of M&A in the mining space, they are going to focus probably on organic growth, not necessarily M&A like BHP has done.
Stephen Engel, our Chief North Asia correspondent there, joining us from Shanghai with that very important conversation in the commodity space. But take a look at how broader markets are trading at the moment. We're seeing Sydney futures pointing to the downside of 0.8% as we head towards the RBA rate decision. The expectation for a hold this week on Tuesday. Nikkei futures pointing up right now, but Japan equity markets on holiday as we continue to watch the Japanese yen, which has accelerated its declines against the U.S. dollar after the BOJ policy decision. No change there, but Governor Ueda's comments taken as a little bit more dovish, in no rush to continue hiking rates. Take a look at U.S. futures not doing much after we lost some ground on the Friday session, but still we're talking about 2 weeks of gains and around record highs, as we didn't see that really alarm from that outsized Fed rate cut of 50 basis points last week. Later today, we'll be live at JP Morgan's annual India Investor Summit in Mumbai. Catch our exclusive conversations with their head of investment banking for India, as well as the global head of capital markets. We have more ahead. This is Bloomberg. This is the Asia Trade. Here are the latest stories that we're following here in Japan. At least one person was killed and several others are missing after torrential rains caused flooding in parts of northern Japan. The country's weather agency says Saturday's rainfall reached the highest daily tally for the area since the agency began recording data. The region is still recovering from a deadly earthquake that struck at the start of this year. Latest polls suggest Japan's former environment minister Shinjiro Koizumi is the top choice among lawmakers in the ruling party's leadership race. Surveys by the Sankei and Mainichi newspapers published over the weekend gave Koizumi the most votes among the 9 contenders to lead the Liberal Democratic Party. If elected on Friday, the 43-year-old would become Japan's youngest prime minister. Let's bring in our next guest, who's cautious about potential conflict between the Bank of Japan and the government, depending on who wins the LDP race. With us now is Tobias Harris, founder and principal of political risk advisory firm Japan Foresight. Tobias, great to have you with us. We've heard from various candidates already some bold calls on what the Bank of Japan should or should not do. What's caught your eye so far?
Well, at the most, I think, notable and maybe extreme statements we've heard about the Bank of Japan are from Takaichi Sanae, who is running, I think, quite strongly and certainly is in the top 3 when it comes to who might make the runoff, because I think we're headed for a runoff, a second round. And she has basically said that the BOJ is making a mistake by moving as quickly as it is to raise interest rates. And frankly, I think that sets the Takaichi government up for possible conflict, because she really wants easy money to continue.
Yeah, of course, for our viewers, I mean, we don't get really the general public voting, so the visibility on who actually comes out on top in this presidential election at the LDP has been pretty low. I mean, we got some polls inside Parliament right now giving us some indications, but what is the overall feel right now about the Bank of Japan's independence? Because, of course, we know they're an independent entity, but at the same time, when the Japanese yen was weakening so much in July towards the 1960s levels, we actually saw the BOJ sort of soften their more hawkish stance.
Well, yeah, I mean, I think it was interesting in basically in May and June when you had Governor Ueda saying that, well, the weak yen doesn't really matter. It's not really affecting inflation all that much. We're not concerned about it. And then, of course, he went and met with the prime minister at the prime minister's residence. And immediately after that, his tone changed. And so clearly, I mean, I think the government has expressed its preferences in various forms over the last several months. But I think it was notable that during the run-up to the interest rate decision in July, we were hearing comments from would-be candidates for the LDP leadership and several people who now are running for the leadership. But the government, I think, was a little more careful in terms of the position it took, because frankly, I think the Kishida government did want to be in a position to say, look, we've conquered deflation, we've succeeded. And so, I mean, I do think it was a difficult situation to be in. They didn't want to, I think, come down too heavily as far as interest rate decision making was concerned by the bank.
Does it feel like, regardless of the outcome, the leadership would have any sort of meaningful impact on the direction or the approach being taken by the BOJ?
Well, I think, if you get a Takaichi government, I think she would very much be looking back to what the late Abe Shinzo did back in late 2012, early 2013, using public pressure and maybe private pressure to try to convince the BOJ to change directions. And then, of course, you had the accord that was reached between the BOJ and the Abe government early on. And then eventually Shirakawa felt so pressured that he resigned. And so I think Takaichi would look to that playbook to try to steer the BOJ in a direction that was more accommodative of the kind of policies that she wants to pursue, because she also, of course, wants pretty loose fiscal policy as well. It's not just about monetary policy. I mean, it is fiscal policy. She wants deficit spending. She thinks that's how Japan should pay for higher defense spending, for example. And so I think part of that equation is having the BOJ continue to be the big player in the market for Japanese government bonds.
What about the playbook when it comes to the openness of Japan Inc., right? We've obviously been following the Seven and I Couche-Tard bid very, very closely. Do you think there are certain candidates and sort of outcomes that would sway the sort of broader approach to that? Because there have been a lot of questions as to, how meaningful have these overtures of opening up been if the government is perhaps willing to designate Seven and I as being a core entity.
Well, I think there's a real contrast there. And I think, for example, Takaichi has run, on almost a neo-Abenomics kind of platform. But I think essential to her way of thinking about things is the importance of security, economic security, building economic strength through security. And so you do wonder how her government would approach basically defending Japan's economy from foreign business, foreign competition. I think if you got a Kono government or a Koizumi government, they've basically hewed to a more, I guess you could say, neoliberal line. They've talked about deregulation and encouraging startups and really trying to shake up the status quo in Japan's economy. And so you would think that they would be more open to more foreign investment and promoting foreign investment, in part to shake up some of the maybe stale and stagnant incumbents in the market.
How much of a focus are national finances here in Japan, in one of the developed world's most indebted economies?
It's clearly, I think, an issue that's important, that has gotten discussed, but not, I think, in a whole lot of detail. And so there are clearly different philosophies at play. I mean, Takaichi, as I've mentioned, is interested in seeing deficit spending continue, and some of her supporters, I think, are open supporters of modern monetary theory, and so basically they don't think deficits are all that important, particularly if the Bank of Japan is going to continue to be a big bondholder. But then there's a variety of views about the urgency of moving forward with fiscal discipline. So Kono is at one extreme. He's talked about that even getting a primary fiscal balance or surplus within the next year or two is not good enough, that Japan has to move faster. Koizumi has, I think, talked in the same vein, and his father also was a big proponent of fiscal discipline, so he's expected to be in the same vein. Others may be seeing it as important, but also not wanting to move too quickly, thinking that there are other priorities for the government in the near term. But no one's really outlined tax increases. No one's really outlining serious spending cuts. I mean, so it's something that people are gesturing to, but we're not really at a point where there's a political consensus for really moving forward to tackle the problem.
Tobias Harris, good to have you with us, founder and principal at Japan Foresight, with his views, of course, as we head towards the LDP presidential election this Friday. Japanese Prime Minister Fumio Kishida speaking at Bloomberg's global headquarters in New York on Monday. This as Japan seeks to promote itself as a global asset management hub. Catch that address in full on the terminal at LiveGo. And of course, you can watch Japan Ahead every Monday at 8:40 a.m. if you're watching here in Tokyo, 7:40 p.m. Sunday in New York. And subscribers can watch live on the terminal using the TV Go function.
Shery, some of the other political stories that we're following this hour. Democratic presidential nominee Kamala Harris is leading Republican Donald Trump in 2 national polls of registered voters released on Sunday. However, the CBS Ipsos survey has all 7 key swing states as toss-ups, with Harris holding a slight edge in all but 2. The NBC poll found 48% of registered voters see Harris in a positive light, compared with just 32% before she entered the race in July. A report from an Australian think tank says slowing economic growth is reducing China's clout in Asia. The Lowy Institute's Asia Power Index says Beijing's influence in the region is plateauing at a level below the US, which leaves China in 6 out of 8 broad measures. India overtakes Japan this year to be ranked 3rd, Australia rising to 5th, Russia dropping to 6th. Sri Lanka's leftist candidate Anura Kumara Desanayake has won a tightly contested presidential election. He secured 5.74 million votes in the country's first ever runoff. Popularly known as in Sri Lanka as AKD, Desanayake campaigned on a platform of clean governance, combating corruption. He's also promised to renegotiate loan conditions under the country's IMF bailout. We will have more when it comes to the outlook for Sri Lanka and its markets later with the Colombo Stock Exchange chairman. He'll be joining us exclusively on Bloomberg Markets Asia at 11:40 a.m. Hong Kong time. More ahead on the Asia trade. This is Bloomberg. This is the Asia trade. Other corporate stories that we're following. Morgan Stanley is reportedly facing a regulatory review over a sell order for SK Hynix shares, placed before it published a downgrade report. Yonghap says Korea's Financial Supervisory Service is planning to look for any unfair acts related to SK Hynix trading. Shares of the chipmaker tumbled more than 11% last Thursday after Morgan Stanley slashed its price target and cut its rating. TSMC and Samsung have reportedly discussed building new factories in the UAE to help satisfy soaring demand for AI computing. The Wall Street Journal cites sources saying executives from the Asian chipmakers have visited the UAE recently to talk about new major operations. It is aiming to become a regional hub and testing ground for AI. The market opens and next, this is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens. And Haidi, with the Fed, the BOJ out of the way, now we're watching for the RBA rate decision as well. No change expected there, but of course we are watching inflation numbers out of Tokyo. Also the Fed's preferred inflation gauge later in the week as well.
And yeah, really that pause or that hold from the RBA looking ever really starker, right, given the jumbo-sized move we saw from the Fed and this cycle of easing that we're seeing from a lot of its peers. But, of course, the inflation picture remains pretty tricky here in Australia, largely on account of these housing prices, Shery.
Yeah, it's been really interesting how inflation has been in focus here in Japan as well, given the volatility that we've seen in the currency markets. But Japan is away on holidays today, so we'll be watching for the South Korea Open. This as we get now the breaking numbers when it comes to the trade numbers for the first 20 days of this month. Exports falling 1.1% year on year. This is surprising because we have seen really export momentum here in South Korea. When it comes to the trade surplus for the 20 days of September, we're talking still about being in the positive $799 million. But this also as we had imports falling 4.5% year on year for the first 20 days of this month. We have seen a little bit more strength when it comes to the Korean won against the US dollar in the month of September. We've been very steadily accelerating those gains from around July, August. Of course, that's been really a factor of the weakness of the US dollar and the other side of that trade as well. But right now, the Korean won holding at that 13.32 level as the Kospi is coming online pretty muted in today's session. Of course, we really don't have much to go on. Japan is away on holidays. We saw a little bit of volatility in the Friday session on Wall Street, but we still saw 2 weeks of gains for U.S. markets, Heidi.
Take a look at how we're faring when it comes to the start of cash trading here in Australia. We did see that underperformance when it comes to Australian bonds already compared to the moves in treasuries that are ahead of the RBA. And as you mentioned at the top show, we are expecting that pause to be extended. Lots of sort of domestic pressure when it comes to wanting the RBA, certainly from the perspective of households that are struggling with the cost of living pressures. But the RBA is really seen to continue to extend that rate pause. Record household debt was really key factor when it comes to the tightening approach. Now, housing is another element that remains quite sticky in the inflation basket there as well. We are seeing stocks off by just about 0.25%, watching supermarket stocks in particular, as we see, of course, Australian supermarkets could see quite active trading. We had the ACCC, this is the Australian competition regulator, commencing separate proceedings in the federal court against Woolworths and Coles for alleged breaches of consumer law. Misleading consumers through discount pricing claims on supermarket products is the allegation from the ACCC. So we'll be watching that sector in particular. The Aussie dollar is actually holding okay at the moment. 68.12 is where we're at, and Brent crude after sort of pretty choppy trading, Middle East politics and conflict, of course, in focus. But we had that biggest weekly gain for WTI last week since February. Shery.
Haidi, our next guest says she's positioned for good yield as well as cheap growth through Asian equities. Let's discuss with Vicki, portfolio manager at Robeco. Vicki, great to have you with us. Tell us a little bit more about your positive take on the Asian equities at a time when I was surprised to be breaking the trade numbers out of South Korea early for the first 20 days of this month, with exports being pressured. I mean, if we get the semiconductor outlook really dampening from here on out, can you still really see the positivity for Asian equities broadly?
That's a great question. Good morning, Shery. So I think we remain positive for Asian equities because we are really seeing the positive impact from the rate cut coming through to this region. Indeed, we do worry about export strength from South Korea and markets like Taiwan, but I think the market is broad enough to give us opportunities also very much in the through the value up program in Korea. So we've actually seen through the second quarter results, a lot of companies have announced positive shareholder return policies from there, and we expect more to come in the second half of the year. So these self-help stories are extremely important, and so we stay selective within South Korea, but we still feel positive for certain stocks in this space, and especially those that are keen to improve shareholder returns. And for the rest of Asia, we're also seeing very positive developments in the ASEAN region. We are seeing beautiful liquidity coming back to this region, which is very much needed. In the Philippines, we've seen first a rate cut ahead of Fed rate cut. And then we've seen last Friday the reserve ratio cut for the Philippines. So many of ASEAN countries have actually way too high of reserve requirement ratios. So we do expect that to come down as well now that the pressure on the currency is less. So I think there are many different reasons to be very positive for the Asia region.
But at the same time, some of those economies that you mentioned, we are seeing idiosyncratic risks like inflation risks for the Philippines, or when we talk about Korea, also the Bank of Korea being a little bit more hesitant to cut given surging housing prices, which is also sort of the same narrative that we're seeing in Australia as well. Given that the narrative across Asia is not really uniform with a Fed easing cycle, how do you factor that in?
Absolutely, you're absolutely right. So I think we need to be selective, and I think many of the central banks are monitoring the inflation situation very closely. But in many of the countries in Asia, we actually don't have that much of an inflation issue. If you take, for example, Indonesia again as an example here, there is room to cut. So I think the pressure on the currency has also been a very important consideration for many of the Asian central banks. So the next step would be indeed focusing on inflation, where that's going, but also indeed get a bit more breathing space now that the Fed has cut rate.
When it comes to the Fed cutting rates, where do we see the dollar going from here? And could some strength in Asian currencies help some of these outflow concerns? And where would you see the most benefit?
I think the rate cut has really brought liquidity to our markets, and so I think the highest upside for the Asian currencies is really in ASEAN space. So there we can expect both very good currency performance as well as equity performance, which is double positive for equity investors. In other countries, it might be a bit less. So there is obviously also less pressure on the Chinese yuan from the rate cut. But incrementally, fundamentally, the reason for the currency to appreciate is a bit less compared to the ASEAN region. So from that perspective, the benefits of currency appreciation is a bit less over there.
At this point, when you take a look at China and obviously the cheapness when it comes to valuations, the ever louder calls for more stimulus, either fiscal or monetary, do you see any kind of reason to have exposure or opportunity in that market?
Yes, the market is so cheap. So there are, for us, value investors and contrarian investors, we see a lot of opportunities. I think the key for us is really to be very selective here. So we are actually seeing a lot of growth ideas are being priced very cheaply in Asia, in China and in Hong Kong. So that's where we are incrementally tuning the portfolio. We want to get more growth and at very attractive valuations. So that's what we're focused on in this part of the world. But I think the very important thing for China and Hong Kong is really still the structural issue of how to deal with the property market, how the economy is transitioning. So there are obviously a lot of issues that's been priced into the stock market. So we do expect every now and then there to be very significant rallies, but it's hard to be very, very positive structurally at this moment on.
A potential softer dollar, as you were talking about earlier, some of these big moves that we've seen, maybe not ongoing from the Fed, but certainly a signal last week. How does that sort of reflect on the outlook for emerging markets, particularly, when you take a look at India, of course, still really expensive, but you're still constructive?
I think in general it's definitely a very good news that a weaker dollar and more liquidity for the emerging markets. So we do hold a very positive view there for the general emerging markets. And specifically on India, India is at a beautiful turning point. We're seeing private sector capex finally starting to take off. And the last time we've seen that was a long, long time ago. I think that was in 2002. So there are many reasons to be excited for the market, and it's priced for perfection, which is on the risky side. But what we're still seeing on a monthly basis is there is very strong inflow into the Indian equity market. We're talking about $1.5 billion per month, and I think over 50% of this amount is actually from the investment plans by the individuals every month. So they put about $29 per month into this market. So that is very strong domestic support there, and it has all the reasons for international investors to participate, but valuation remains to be expensive. So in this market, we look for value opportunities, we look for contrarian opportunities, and we try to look from a different lens, from an international perspective, to find those opportunities that are hidden in this beautiful Indian market.
Vicki, really great to have you with us. Vicki Chu, who's a portfolio manager for Asian equities at Robeco. Let's take a look at a couple of the stories that we're watching in some of these correlated stocks, right? Supermarket stocks, as I mentioned, in Australia are going to be front and centre today. We have, of course, a response now from Woolworths, essentially just acknowledging that they have really received, of course, this notification from the ACCC that they are reviewing it. The legal proceedings that are now on foot, they will be carefully reviewing the claims made by the ACCC and will engage with the regulator. So these two biggest supermarket chains being Coles Group and Woolworths seeing downside of between 2.5% and 2.75% apiece at the moment. The ACCC in this legal action claiming that the retailers sold products at regular long-term prices for at least 6 months before then increasing them by at least 15% for a period, but marking them as being discounted. So we'll continue to watch this. Of course, there have been a lot of domestic political pressure as well as just broader reputational additional pressure on some of the big supermarket chains in terms of pricing and conduct, particularly in the wake of the COVID crisis and some of the sort of stockpiling that went into that story there. We're also watching Rupert Murdoch's REA Group sweetening its bid again for Rightmove. This is the UK property portal, to about $8.1 billion US dollars, or £6.1 billion. Their earlier bids, as we reported over the weekend, had been rejected. This improved sweetened offer, valuing Rightmove at 770 pence a share. According to REA, they would receive, in terms of those investors, 341 pence in cash, as well as new REA shares. So that 705 pence a share deal had been rejected, as was 749 pence a share in terms of undervaluing the company. So we continue to wait to see what the next missive is from the other side. More ahead on the Asia trade. This is Bloomberg.
President Biden has been caught on a hot mic at a diplomatic summit, saying China is testing the U.S. and its allies in the Indo-Pacific. Those comments came even as the Quad group's leaders publicly sidestepped the idea that they're a counterweight to Chinese influence. For more, our China correspondent Minmin Lo joins us now. And Minmin, what exactly did President Biden say?
Yeah, he took quite a different tone when he thought he was in private with the foreign leaders versus in the public opening remarks of the Quad leaders. Now, this is a meeting between the prime ministers of Japan, Australia and India with U.S. President Joe Biden at his hometown in Delaware. And in the public opening remarks, the leaders were exchanging warm greetings. There was no explicit mention of China. Prime Minister Modi explicitly said that they were not against anyone. And we know that the U.S. National Security Advisor Jake Sullivan told reporters just earlier on Saturday that the Quad is more than just one country. But then when reporters were escorted out there, President Biden was caught on record saying that that China is testing the U.S. and its allies. Have a listen.
We believe Xi Jinping is looking to focus on domestic economic challenges and minimize the turbulence in China diplomatic relationships, and he's also looking to buy himself some diplomatic space, in my view, to aggressively pursue China's interest. China continues to behave aggressively, testing us all across the region.
President Biden then went on to talk about China's aggression in the South China Sea, the East China Sea, the Taiwan Strait, and South Asia, where we know China has a border clash with India. And he said that these issues are relevant across all four countries. And we know that, yes, the Quad has, according to their statement, agreed to collaborate on many areas, including cancer prevention, agricultural advancement, renewable energy, and climate change. But at the same time, countering China is a big part of that as well. The four countries have agreed to set up a new observer program next year to enhance maritime security. They're also starting a training initiative to equip these four countries to better monitor and enforce the laws in their waters and to prevent any unlawful behavior. And the statement released by the White House also mentioned serious concerns around these disputed features, militarization of the disputed features in the South China Sea. And we know that China, for its part, the Foreign Ministry has previously said that the Quad has been trying to incite confrontation. So it looks like both sides are quite cognizant that their behavior in public needs to be quite sensitive here, because any sort of deterrence could be misinterpreted as aggression by the other side.
The policy front, though, continues to be aimed at tightening the screws on Beijing, right? We're hearing that the Biden administration, even as the clock counts down towards the election, they're preparing a ban on software used in Chinese cars.
Yes, so the Commerce Department of the U.S. have been meeting with industry experts, and they're looking to address security issues arising from this new crop of smart cars that have devices that would connect the vehicles to the internet or to cloud services that would then make them a target of hackers. So the proposal will stop or will ban the testing and use of Chinese and Russian software, as well as some hardware that are used in automated driving and vehicle communication systems. So the intention is to prevent data collected on U.S. drivers from being sent back to China and prevent hackers from being able to intercept these communication systems using software that are developed domestically by Chinese companies. Now, we know that, yes, there is a national security element to this, but at the same time, it's undeniable that there is some sort of protectionist element here, because a side effect of this is that it would prevent Chinese car makers from being able to sell cars that make use of these Chinese software in the U.S. It would prevent companies like BYD from, using their plant in Mexico, for instance, to export cars into the U.S. via Mexico using that free trade agreement between Mexico, the U.S. and Canada. So that's what's happening now. It looks like the Biden administration is hoping to enact this law before January, before Biden steps down in late January. In the meantime, they're having a 30-day comment period to gather comments before enacting the law.
Bloomberg's China correspondent Min Min Lo there. Well, tensions between Israel and Hezbollah have intensified after the Lebanon-based group launched around 115 rockets, missiles and drones toward vast areas of Israel's north. Let's bring in Bloomberg's Michael Heath, and we were watching for the tit for tat, but I mean the rhetoric, Netanyahu saying he will take whatever action necessary, Hezbollah saying this is now an open-ended battle of reckoning.
Yeah, I mean, there's sort of a difference between what they say publicly, which they must say, obviously, to their respective electorates, and Hezbollah's leader especially, because that was just such an extraordinary attack that presumably Israel pulled off. And what they actually do, I mean, both Hezbollah and Israel feel like they know what they can do with the other side before it spurs war. Now, whether that's right, who knows? I mean, there's been no case of pages blowing up on a whole series of, hundreds of fighters before. So it's a really difficult situation to understand. But presumably Hezbollah is going to need to respond at some point. And Israel wants to put its people back into the north of the country and push Hezbollah back from the border. So Israel, it seems, is at this stage just trying to degrade Hezbollah's attack ability to stop it being able to launch anything major. But I mean, at some point they will. Hezbollah's got a strong reputation. It's a smart organisation. It's well regarded by its enemies, at least anyway. So yeah, very, very nervous times.
What does this speak to when it comes to the ambitions of Israel, the confidence and how it feels, the conflict in Gaza has mostly played out?
Yeah, well, look, I mean, on one hand, I think Israel feels like it has to restore its deterrence capability. I mean, October 7th really punched a huge hole in that view that's always been, that Israel's always had, that it's stronger than everybody else. It was vulnerable there. So there's part of that, but it's also that whole narrative change seems to have left Gaza sort of in the background somewhat. And the feeling seems to be that they've destroyed Hamas's military capabilities, yet what comes next, who knows? And will Hamas be able to regenerate itself there? But at the moment, that sort of goes in the background, hostages, deal-making, all this sort of stuff, as the focus comes to southern Lebanon and northern Israel. And Israel made returning those sort of internally displaced people back to their homes in northern Israel as one of its war aims now. So presumably, now they've set that, they must achieve it.
And we're now seeing heightened tensions in the West Bank as well. What's the likelihood of something like October 7th happening from the West Gaza region into Israel?
Yeah, Shery, I mean, there's some good reporting on Bloomberg about that. There's a lot of tension there. There's talk that Iran is trying to funnel cash into the West Bank. It's got a very, the population is very economically depressed because Israel has closed the border so that these people can't work in Israel. The Palestinian Authority there is fairly degraded, so it's not running things particularly well. And there's a lot of discussion and reports about Iran trying to smuggle arms through Jordan to the West Bank, and that would be perhaps a staging post for another attack. By the same token, though, you've got this very right-wing government in Israel. It seems to have green-lighted settler attacks, illegal settlers in that area to attack local Palestinians there as well. So it's a very combustible situation. I mean, Israel realises it can't have another October 7th, so it's trying to be preemptive. But the political, the sort of green light that's going on there for settlers to behave in ways that normally would not be allowed is really, it's making the situation even worse. It's sort of at boiling point, basically, from looking at this stage.
And of course, it's Unger Week in New York this week. This situation, as well as Ukraine, front and centre. How would Western leaders be feeling about this at the moment? We know that, they want the exercise of caution, which isn't necessarily playing out at the moment.
Yeah, I mean, it's very difficult, isn't it? Because against the background of all this is sort of this US presidential election. So the warring parties are kind of like, they want to sort of get things done while they've got this hiatus as well. But of course, the world is watching what goes on there. So, yeah, I mean, it's just very, very worrying times.
Bloomberg's Michael Heath there with the latest. More ahead on the Asia trade. This is Bloomberg.
This is the Asia Trade. Here are some of the latest corporate stories that we're following at the moment. Bloomberg has learned that Apollo Global Management has offered to make a multi-billion-dollar investment in Intel. Sources say the alternative asset manager has indicated it's willing to make an equity-like investment of as much as $5 billion in the chip maker. We're told nothing has been finalized and the size of the potential investment could change. That development comes with California-based Qualcomm is said to be floating a friendly takeover of Intel in what could be one of the biggest ever M&A deals. Sources say Qualcomm has been speaking with U.S. regulators and believes an all-American combination could allay any antitrust concerns. We're told also Qualcomm hasn't ruled out buying or selling parts of Intel in a combination. Morgan Stanley is reportedly facing a regulatory review over a sell order for SK Hynix shares placed before it published a downgrade report. Yonhap says Korea's Financial Supervisory Service is planning to look for any unfair acts related to SK Hynix trading. Shares of the chipmaker tumbled more than 11% last Thursday after Morgan Stanley slashed its price target and cut its rating. TSMC and Samsung have reportedly discussed building new factories in the UAE to help satisfy soaring demand for AI computing. The Wall Street Journal cites sources saying executives from the Asian chip makers have visited the UAE recently to discuss major new operations. The Middle Eastern nation is aiming to become a regional hub and testing ground for AI. Take a look at how these Korean chip makers are trading at the moment. On the news, we're seeing Samsung now at the lowest level since May, while SK Hynix has been gaining ground for the last two sessions. Of course, we continue to watch chip maker exports. In South Korea, we just got the first 20-day export numbers falling 1.1% year-on-year, but that did not factor in the Chuseok holidays in early September. So in fact, adjusted, we're talking about an 18% gain, still strong exports from the country.
Take a look at how we're trading. We're just about 30 minutes into the start of trading across major markets. Bit of bifurcation there. We're seeing Korean stocks up by about 0.25%. We are seeing weakness, though, when it comes to trading here in Sydney, off by over 0.5% there. A lot of concerns over the health of the Chinese economy, and some of that really optimism fading after the jumbo-sized cut from the Fed last week. So really, in a sense, I guess a lot of traders are looking for what the new pages of this playbook might look like. Kiwi stocks are off by about 0.3% there as well. We're watching in particular when it comes to some of the supermarket names, given that we have had that development of the ACCC's legal action against Woolworths as well as Coles. We had the acknowledgement from Woolworths and now also hearing from Coles, perhaps in somewhat more strident terms with regard to how they're planning to counter that, saying that the allegations relate to a period of significant cost inflation when Coles was receiving a large number of cost price increases from from suppliers. So, of course, a lot of these going back to sort of around a pandemic era pricing for which the supermarkets had come under enormous amounts of pressure. Broadly speaking, though, we're seeing quite a mixed session at this point. And, of course, in Australia, we're also seeing some caution looking ahead to the RBA decision as well. Take a look at what we're watching when it comes to trading in the Chinese yuan. We have seen that boost, of course, on the back of the jumbo-sized Fed cut that could, in theory, prompt more PBOC easing. That 7 level of support is really being eyed, and that potentially gives a bit more space for the PBOC. We saw the yuan hitting the strongest level in about 16 months, and in fact, around just less than 500 pips away from 7 per dollar. We know that that is a psychologically key round number when it comes to trading in the yuan. We had onshore rand traders telling us that their corporate clients increased FX selling after the rate cut from the Fed. State-owned banks in China were also seen buying dollars to try and slow down the yuan's appreciation as well. So this potentially creates a bit of a loop that the PBOC could find the need to address, because expectations of a stronger currency driving exporters to sell more US dollars, that then pushes the yuan even higher, and that behaviour or that sort of cycle is starting to gain momentum as well. We're seeing banks seeing more foreign currency sales than purchases for their clients last month for the first time in more than a year. So continue to watch that dynamic and Shery, what that means in terms of potential action from the PBOC.
Haidi, let's head to Shanghai because executives from some of the top multinational firms, including GM, Adidas, HSBC, and Rio Tinto, gathered at the 36th International Business Leaders Advisory Council meetings. Our Chief North Asia correspondent, Stephen Engel, has more on what's been discussed at the conference. Steve, so what was your key takeaway?
Well, one of those executives that you just mentioned who attended iBlack here yesterday on the banks of the Huangpu River on the Bund, just right there, actually. I can see it out the window. And that is, and there's the skyline, obviously, of Lujiazui, where we are right now, was Martin Sorrell, Sir Martin Sorrell. Of course, the legendary ad man who founded and was chairman of the WPP Group, now runs S4 Capital. He has a keen interest in China. In fact, this was the 6th time I've interviewed him when he has come to Asia over the last 21 years that I've been with Bloomberg. He has that keen interest in the Chinese consumer, which of course are a bit hesitant to spend right now. I wanted to get a pulse check from him on those spending patterns and what is needed. He says more stimulus from the Chinese government is needed now. Here's our conversation.
The 3 things that we see going on in China is the Chinese consumer is becoming much more value conscious. We see outbound Chinese very significant. You know, people say that Google and Amazon and Meta don't have Chinese businesses. They do. It's called outbound Chinese. You know, it's Xiaomi, it's all the EV manufacturers, Oppo, Vivo, it's Alibaba, Tencent, and TikTok. So outbound Chinese is huge. And then thirdly, the growth of Chinese brands. Don't underestimate this. And Chinese coming back from a US education. You know, I saw a company called Minimax here, which is an AI company, text to video, text to voice growing. So the power of the Chinese brands. So the background is difficult, and there's deflation as well, as you hinted at. So real interest rates might be 2%, but deflation's 3%. So real interest rates are very high. What's going to happen? The pressure is building. I think the Fed taking
50 basis points,
50 basis points cut out, and perhaps going further, gives the Chinese a little bit more wiggle room. But I think the pressure is intensifying, and the thing I'm looking for is for the government to change their stance here and be a bit more expansive, because they do have wiggle room.
But they've held off from doing that. They don't want to exacerbate.
They've done a little bit. They've done a little bit. They've done it in small steps. I'm looking for a bigger step, because they do have flexibility on interest rates and lowering them, and they do have flexibility with central government budgets, not local government. So they can spend a bit more money. So that's what I'm looking for. I'm looking for a little bit of a reversal in the policy. In the absence of that, I think it continues to be quite tough.
For how long? Because, again, one of our last interviews that we did, I think was in 2011, you said the global shift of power, influence, and money is unstoppable to places like China, to India, to emerging parts of the world. It's a long time ago. A lot has changed.
I think it's intensified that. See, I think they're really interesting. If the Americans if Donald Trump is elected, which probably looks less than 50-50 at the minute, because it looks like Kamala Harris has made some ground in it, but maybe even with Kamala Harris, if tariffs are increased, that puts further pressure on the Chinese economy. Now, the US economy is about $28 trillion in GDP. The Chinese economy is 18, so it's 46 out of about 106 for the world. What I'm saying is the Chinese should concentrate more on the 60 trillion that's outside US and China. So global south v global north, going into Latin America, going into Africa, going into the Middle East. And the Chinese are doing quite an interesting job in Europe now on EV tariffs, for example. I mean, you've got Spain and Germany saying...
Resisting. And Hungary is opening its doors for manufacturing. Viktor Orban there.
Well, I remember the head of Shery, in Europe, I think it was, but they introduced EV brands into, they've got a plant in Spain, in Barcelona. The CEO was asked, are you going to open up a plant in the UK? And he said yes.
So this is where a lot of this excess capacity, industrial capacity, can go to places like Africa and South America.
Now, the problem is these markets are much more fragmented. They're obviously smaller, but in total size, I mean, they may be more difficult to penetrate because they are more fragmented, but in total size, and given the growth that you're seeing in those markets because of the shift to the global south, I think there is some logic to it. But what I'd like to see from a Western point of view is for China to be more aggressive in terms of its stimulation, both in terms of interest rates and spending.
And that Chinese slowdown obviously has contributed to uncertainty for the global economy, and S4 Capital has not been spared that uncertainty. The first half revenue was down 18%, and S4 Capital gave a less than upbeat outlook for this current second half. One good thing is they did sign up earlier this year General Motors as a main client. However, interestingly enough, Mary Barra, the General Motors CEO, is a member of iBlack. She was supposed to be here. She didn't show up. There are troubles obviously brewing for legacy automakers here in China. They once were the top foreign automaker here in China. Now they are losing money. They're losing share, talking about possibly redoing their joint ventures with SAIC that is coming up for renewal. So a lot of interesting things on the automobile front, obviously, that we're going to be continuing to talk about. One last thing I want to say, I asked him about Hong Kong, because he was at WPP, he was basically the boss of Burson Marsteller in Hong Kong, which came up with Hong Kong's Asia's World City slogan back in 2001. I asked him if that still holds water given the troubles in Hong Kong. He said that is completely overblown. Hong Kong will be just fine.
Chief North Asia correspondent Stephen Angle there in Shanghai. The latest political stories that we're following at the moment, and Democratic presidential nominee Kamala Harris is leading Republican Donald Trump in two national polls of registered voters released on Sunday. However, the CBS Ipsos survey has all 7 key swing states as toss-ups, with Harris holding a slight edge in all but 2. The NBC poll found 48% of registered voters see Harris in a positive light, compared with just 32% before she entered the race in July. Sri Lanka's leftist candidate Anura Kumara Desanayake has won a tightly contested presidential election. He secured 5.74 million votes in the country's first ever runoff, popularly known in Sri Lanka as AKD. Desanayake campaigned on a platform with clean governance and combating corruption. He's also promised to renegotiate loan conditions under the country's IMF bailout. We'll have a lot more when it comes to the outlook for Sri Lanka and its markets later. The Colombo Stock Exchange chairman will be joining us exclusively on Bloomberg Markets Asia. That's at 11:40 a.m. if you're watching in Hong Kong. More ahead on the Asia Trade. This is Bloomberg. This is the Asia Trade. A report from an Australian think tank says slowing economic growth is reducing China's clout in Asia. The Lowy Institute's Asia Power Index says Beijing's influence in the region is plateauing at a level below the US, which leads China in 6 out of 8 broad measures. India overtakes Japan this year to be ranked 3rd, Australia rising to 5th, and Russia in the meantime dropping to 6th. Joining us now is Susanna Patton, who's a Southeast Asia Program Director at the Lowy Institute, and of course you led this report. I was perhaps a little bit surprised that China hadn't dropped quite as much as you might have expected.
So you thought that China would have dropped more
Perhaps,
than what
yes.
it did? Yeah, I think that what we see is that power is defined very broadly. So even if China's economy is slowing, it still has other sources of resilience in the region. And one area, for example, where it still continues to lead the United States by a huge margin is its trade and economic relationships with countries in the region. That's China's greatest advantage, still even now that its economic growth is slowing.
What have we seen when it comes to the gains that the United States have managed to make?
So the US economy has grown strongly, and so that has contributed to higher US economic capability, one of our key measures. Another area where the US continues to have a huge lead over China is in the area of defence and security relationships and networks, and we've certainly seen that under the Biden administration, that there's been a real resurgence, for example, of the US-Japan alliance. And by contrast, China's own network of security and defence partners in the region remains extremely limited.
It's interesting you talk about the Biden administration because obviously even though both sides of the aisle are arguably sort of as hawkish when it comes to Beijing, there's certainly been more engagement, perhaps more consistent engagement from the Biden administration. Do you anticipate that sort of level of uncertainty that could return with the second Trump presidency?
I think so. I mean, what we saw under the Trump administration was that the US diplomatic influence in the region declined. But in fact, we've actually seen that in this edition of the Power Index as well, that although the US performs very well when it comes to the defence and security partnerships, on broader diplomatic influence, it actually dropped to rank third behind both China and Japan, which is really attributable to the fact that the US engagement with the region is heavily concentrated in a small number of partners. So we track all the diplomatic engagement by the foreign ministers and leaders in the region, and we found that around 40% of US engagement is with just 3 partners. It's Quad partners.
Is that also a reason why we're seeing China actually climb up in the rankings when it comes to military posture across the region?
Yes, so I think what we've seen with that sub-measure of our index is that this is the first time actually in 6 years that our experts who we survey as part of the index rated China as having a better military posture in Asia than the United States. And what that really reflects is the fact that China's added a huge number of new capabilities, especially to its navy. And meanwhile, the US is quite globally dispersed in terms of its focus. So even though it still has a higher military capability than China overall, when it comes to military posture in Asia, China is now in the lead.
At least when it comes to one of America's biggest allies, Japan, it seems that they're investing more in its military capabilities now.
Yeah, so Japan is very interesting. Japan, we found in this edition of the index, had a huge uptick in its defence network score. So that refers to its partnerships, not just with its ally, the United States, but also with a whole range of other countries in the region. And we saw that most importantly with the Philippines, where the two countries signed a reciprocal access agreement earlier this year. Where we're yet to see much of a shift is in Japan's own military capability score. So its own military capacities hasn't actually improved that much. And that's because even though Japan has been increasing its defence spending, others in the region have been doing relatively more.
Also, perhaps unsurprising, is the dwindling influence of Russia.
Yes, so Russia slides down the rankings this year and is in fact overtaken by Australia. And what that is really due to is the fact that Russia is very distracted by its war in Ukraine. It's been able to rebuild its own military, its own economic growth stats look okay, but in terms of its ability to focus on Asia and engage with the region, it's been quite limited. And Putin's visit earlier this year to North Korea and Vietnam, as well as China, really looks like more of an effort to shore up its influence than a real statement of its strength.
Is the growth story really for Southeast Asia?
Well, Indonesia is particularly interesting because Indonesia is actually the country in the index that has improved the most since 2018 and also had the biggest improvement this year. And it's not due to any one single factor. So Indonesia's diplomatic influence has increased, but it's also become more outward looking in its economic engagement with the region. It's trading more with the region. It's attracting a lot more investment. And so that has really increased Indonesia's score.
What are some of the risks that you would be looking out for as we head into, of course, a period of pretty significant diplomatic uncertainty, right? We're counting down to the November election, counting down then, of course, to January with potentially, a presidency that could look like two very different paths. What are the risks for Asia, or do you think the fundamentals are quite well placed in the level of engagement that we've had?
I think some things will remain the same in terms of the US focus on the region, but there's definitely a risk because the Biden administration was actually fairly exceptional in the degree to which it prioritised Asia, and we've just seen that over the weekend, of course, with the Quad Summit. I think there are real questions, certainly about whether a Trump administration would sustain that, but even possibly a Harris administration, because the global demands on the US are very high. The tendency to focusing on the Atlantic relationship, on challenges in Europe is very strong. And so I don't think we should take it for granted at all that the level of focus that the Biden administration has had will be sustained under either Harris or Trump.
Susanna Patton, Southeast Asia Program Director at the Lowy Institute. It was really great to have you with us. We do have breaking news on the Bloomberg terminal right now. We're seeing that Sri Lanka's dollar bonds due 2029 are sliding 3.3 cents to the dollar. This, of course, coming after the presidential election. Sri Lankans just elected a leftist political outsider as president, popularly known as AKD Dissanayake, has vowed to reopen negotiations with the IMF over its $3 billion bailout. This, of course, came with spending cuts and tax hikes that were deeply unpopular with voters. And the new incoming president is now vowing to reopen those negotiations with the IMF, and reviewing the debt plan or reopening these talks with the IMF do risk delaying the disbursement of fresh loans. We saw those Sri Lanka dollar bonds due 2029 sliding 3.3 cents to the dollar. We'll have more on the outlook for Sri Lanka and its markets later with the Colombo Stock Exchange chairman. He joins us exclusively on Bloomberg Markets Asia at 11:40 a.m. Hong Kong time. We have more ahead. This is Bloomberg. Subway operator Tokyo Metro is seeking to raise over $2 billion in what could become Japan's biggest IPO since 2018. The company plans to price the offering and list on the Tokyo Stock Exchange next month. For more, let's bring in Asia Equity Capital Markets reporter Julia Fioretti. And Julia, this could be the largest since SoftBank back in 2018. It's pretty significant.
Hi, yes, it definitely is very significant. It's also a government privatization, which makes it all the more significant. And the company is almost 100 years old, and it's one of the two subway operators in Tokyo. It's obviously got a very large focus on the retail component of it. About 80% of the deal will go to domestics, and it's also coming with quite a high dividend yield and that is also to entice the domestics to come into the IPO. So there's quite a lot of focus on it. It's been talked about for years, and as you say, it'll be the largest in 6 years. So it does come at quite a pivotal time for the Japanese IPO market.
What do we know about Tokyo Metro and sort of its operational prowess throughout the city?
So it's one of the two subway operators in the city. The underground in Tokyo was established about 100 years ago, and then this Tokyo Metro 20 years ago. It operates about 9 lines, and so it's pretty significant. It's obviously a very familiar name. And although it's not a company that is going to have super high growth, it's coming with this paying quite a high dividend, and so it's going to be seen as quite a relatively stable business, stable growth. And they are expecting it to grow as more tourists come in, and they expect Tokyo's population to grow.
Our Asia Equity Capital Markets reporter Julia Fioretti there on the Tokyo Metro IPO that we're watching. And take a look at how we're trading when it comes to stock equity futures, I should say. US futures are looking like this, and we're also heading into the start of trading in the next hour for Taiwan and China and Greater China. We're seeing S&P futures looking pretty positive there, and even as we kind of see the bulk of this euphoria after the jumbo size cut from the Fed start to fade, TAIEX futures also sitting on the upside there as well. We have seen that leadership from the likes of TSMC, and that could continue, but look for more weakness when it comes to property stocks, as we saw the central bank last week raising the RRR again. FTSE A50 China futures looking pretty flat at this point as we continue to see that downside when it comes to certainly the onshore side of trading there, but Hong Kong stocks looking like they are perhaps a little bit more better placed in terms of taking a part of this melt up for Asian equities in the weeks ahead. That sort of momentum we had from the Fed could potentially see that boost for catch-up plays across the region, and Hong Kong is looking like a bit of a leading candidate in that, given that we've had that first HKMA rate cut in 4 years. So taking a look to see whether we see that favourable setup translate to a little bit more bullishness in the Hong Kong session today, Shery.
Yeah, perhaps a little bit thin trading early in the session because Japan is away on holidays, but we continue to watch the Japanese yen under pressure past that 144 level. As we're getting now the ASX 200 falling for the first time in 8 sessions, so a little bit of consolidation there. The Kospi is still trading in the green right now. Tech and healthcare leading those gains, but we're watching SK Hynix very closely right now. We're seeing a little bit of upside with local reports saying that Morgan Stanley is facing a regulatory review over a sell order of SK Hynix shares placed just before it published a downgrade report last week. Kiwi stocks down to 0.4%, but still early in the trading session. That's it from the Asia Trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. This is Bloomberg.